But let's get to Dan Ives now, Global Head of Technology Research at Wedbush Securities. As this market digests this news, Dan, we are seeing a little pairing of those declines. You were looking for a mic drop quarter. Could you call this that?
I think you print this press release off and you can put it in the Louvre. Just frame it. Oh. Because look, I mean, what you're really seeing here, this is a stock that's going to be green tomorrow. I mean, what they're putting up in terms of Hopper, in terms of overall growth, it's exactly what the bulls want, and he'll continue on the promise. I mean, next quarter that could be a 4 in front of it in terms of ultimately revenue. This is just the beginning of the AI revolution. $4 trillion on its way. Sure,
and long term, you may be very well right, but are you not concerned about this plus or minus 2% that the company is reporting on revenue, simply because the market wants the company to beat and beat well every quarter?
Yeah, if you looked up sandbag special in the dictionary, you'd see this guidance. And I think Street's going to look through it. I think this is a stock that probably will be up even on the conference call, because if you look at everything that they did here in terms on the data center, you could Hopper, we could be talking 5, 7, 8 billion per quarter. That was just ultimately many thought it could just be a few billion. So as this all plays out and you start to look at numbers over the next, call it 12 to 18 months, the godfather of AI, Jensen, Nvidia, continue to be in that Mount Rushmore, and it just shows it's starting with Nvidia. Now second, third, fourth derivatives playing out. That's why it's 9:30, 10 p.m. in this AI party that goes to 4 a.m.
Oof. Has the time changed at all since you came out with that?
It was 9 p.m.
Okay.
And now we're 9:30, 10 p.m.
Okay, got it. So my other question to you, since there are so many commentary, there's so much comments on Blackwell, how production will ramp up into fiscal 2026, the production shipments will begin in the fourth quarter of fiscal year 2025, which is the current quarter. Does NVIDIA break out Blackwell revenue, or is this something that you and investors always need to reverse engineer out of the data center numbers?
Yeah, essentially investors reverse engineer it. But if you look in terms of some of the wording there, basically saying any of those heating issues, don't worry about it. And I think that's going to give more and more comfort. This is going to ram significantly in terms of that. And I think that continues to be the story, because we've talked about from our Asia trip, demand to supply 15 to 1. And there's only one game in town, and he's wearing a black leather jacket. His name's Jensen. And I think that's why this continues to be still in the early days of what I believe we'll be talking about $4 trillion on.
On Wednesday, Nvidia exceeded expectations for sales and earnings. Early on Thursday, shares reached a fresh high. On November 6, during the Donald Trump election rally, the stock broke out a proper purchase price of $140.76 and reached a new high of $149.77. But then, before the third quarter numbers were released, the stock faltered. With an ideal earnings per share rating of 99 and a composite rating of 97, Nvidia is still outperforming the market. Nvidia leads the S&P 500 in terms of projected sales and earnings growth through 2026 per FactSet data. Over the next 2 years, analysts anticipate that the S&P 500's revenues will rise at a compound annual growth rate of 5.7%, and its profits per share will expand at a pace of 13.8%. However, they predict that Nvidia's 2-year compound growth would reach 35.1% earnings per share and 35.5% revenues. Sales for the third quarter totaled $35.08 billion, and the company made 81 cents per share. Estimates from analysts surveyed by FactSet were 75 cents per share on $33.17 billion in sales. Additionally, sales exceeded the $32.5 billion forecast for the quarter by the leader in artificial intelligence chips. Compared to the previous year, when the leader in AI chips recorded $18.1 billion in revenue, sales almost doubled. Chip lithography gear manufacturer ASML upheld its lower-end 2030 sales goal of $46.3 billion on Thursday of last week. The news came after ASML issued a warning on October 15 that it expected demand to decline in 2025. As a result, Nvidia's stock fell by almost 5% during the day. According to Christophe Fouquet, CEO of ASML, the company now anticipates being able to contribute to the artificial intelligence opportunity and grow technologies over the next 10 years. Jefferies Group analysts thought the decrease in semiconductor demand was only temporary. Nvidia gets its chips from foundries that employ ASML's lithography equipment. Joe Moore, an analyst at Morgan Stanley, expressed worries about a chip shortage that would hurt the company's earnings and prospects prior to its reports. Despite maintaining an overweight rating and a price target of 160, the analyst viewed the period ending in September as a transitional quarter. According to the analyst, the company's Blackwell chip could generate $5 billion to $6 billion in revenue for the January quarter. Funds have recently been reluctant to purchase the company, despite the fact that its price performance has outperformed 97% of other equities in Investors Business Daily's database. On a scale of A+ to E, the accumulation/distribution rating, which gauges price and volume movement over the last 13 weeks, is just D+. Piper Sandler analysts increased their price objective from 140 to 175 because they believe the stock would rise by 20%. Nvidia stands to benefit the most from the growth of the AI accelerator business as a whole, which Piper Sandler projects will reach $70 billion by 2025. Additionally, Melius research analysts kept their buy rating and increased their price objective from 165 to 185. In terms of the Dow Jones Industrial Average, Nvidia has supplanted Intel. The fourth member of the Magnificent Seven to join the Dow Jones Industrials is Nvidia. The others are Microsoft, Amazon.com, and Apple. According to recent reports, there is still a considerable demand for Nvidia's AI chips. Big Tech's combined capital expenditures of $218 billion this year and an additional $254 billion in 2025, according to the Chief Investment Officer at UBS Global Wealth Management, augur well for the AI investment thesis. In the meantime, Vertiv exceeded profitability projections for its September quarter due to robust demand for AI data centers. Huang, the CEO, announced in October that a design defect in its next-generation Blackwell chip had been resolved. Yields were low earlier, but Taiwan Semiconductor, a manufacturer of AI chips, helped overcome this issue and resume Blackwell production at a remarkable rate. Following a 54.2% year-over-year increase in Taiwan Semiconductor profits, Nvidia's shares cleared a trendline entry near 139.60 on October 17. Apple and Nvidia both purchase AI chips from Taiwan Semi. The entire addressable market for AI technology and software is expected to rise by 40% to 55% over the next 3 years, according to a September report by consulting company Bain. Compared to 1.5 million for its H100 units in 2023, demand for Nvidia's next-generation graphics processing units, the GB200, is predicted to reach 3 million in 2026. According to analysts at Bernstein, Nvidia's sustainability is the primary concern following its extraordinary rise, although the moment is obviously not now to be concerned. According to Dow Jones Markets data, Nvidia saw the biggest one-day market cap fall in dollar terms for any American firm on September 3, plunging precipitously below the 50-day moving average. The stock has been impacted by the outcomes of other prominent AI businesses. While Oracle Chairman and Chief Technology Officer Larry Ellison stated that his company is constructing a data center with acres of NVIDIA GPU clusters for training big linguistic scale AI models, memory chipmaker Micron claimed strong AI demand, which helped NVIDIA's stock rise. But NVIDIA was impacted by Broadcom's results. Although Broadcom's earnings and sales exceeded forecasts, the company's sales outlook was disappointing. Despite exceeding analyst projections, Nvidia's shares dropped 6.4% following its August 29 report. The graphics processing units from Nvidia contribute to data center and AI application compute speed-ups. The business was a pioneer in the development of graphics processors for use in robots, cars, and healthcare. With the release of OpenAI's ChatGPT in March 2023, generative AI advanced significantly. According to Huang, the iPhone moment of AI was made possible by NVIDIA's AI-capable supercomputer. That assisted NVIDIA in improving its performance. In late 2022 and early 2023, it recorded 4 quarters of shrinking profitability and 3 quarters of declining year-over-year sales. However, in the last 6 quarters, the company's top and bottom lines grew at record rates. The stock of Nvidia is included on the leaderboard. Investors may determine if Nvidia stock is a good investment right now by examining technical indicators and chart indications. After reaching a buy point of 140.76, Nvidia has moved over a buy zone. However, from a handle buy point of 144.42, the stock is in a buy zone that rises to 151.64. As a result, the stock is now a buy. So, what implications does this have for Nvidia stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
You mentioned the overheating issues, and these are Blackwell, overheating, which might require redesign of the servers housing the chips. And the companies that make the servers are Dell, Hewlett-Packard Enterprise, Supermicro. Do they end up carrying the cost of having to redesign everything?
Yeah, but ultimately, I think that is something that's really noise. And from all the checks we do, that's why, look, when you're at the top of the mountain, you're always going to have people trying to take shots at you. But if you look at how NVIDIA is playing out here, there's really no production issues as this all ramped. And that's why when you hear from Jensen today, I think investors are going to realize this AI revolution, now it's about second, third, fourth derivatives. You look what's going to play out across software, across the rest of semis, across cybersecurity. If you're a tech bull, this, combined with obviously the last few weeks in terms of Trump, Musk, and everything we see, this is what I think is really going to be a setup to a Santa Claus rally.
So we are seeing NVIDIA saying that Blackwell is going to exceed supply for several quarters, but that there are some supply constraints. Now, you do those channel checks, Dan. Tell us the truth. Where have you seen those bottlenecks or those potential places where supply will be constrained?
Everyone's waiting in line. They're at the velvet ropes, and there's only one party, and that's really, in terms of NVIDIA and Jensen, I think the issue there is that you want those next chips. That's what everyone, that's the new oil or gold.
Yeah, but that's the customer side. I'm talking about from the supply side, from NVIDIA being able to actually deliver these.
It's ramping. It's ramping. Look, like any new production, any new chip, it's going to take time to ramp. But I would say if you thought relative to 3 months ago, ahead of expectations. So you sit there right now, if Jensen's flying the plane, you're in 3A watching Netflix feeling pretty good.
In terms of pricing power, can Jensen Huang raise the prices of those Blackwell chips even more than what he has already? I mean, what are you expecting on that front? And should people look for maybe increased prices for those chips?
They definitely can, but right now, it's all about market share. They're just going to continue to go further and further out. And even when you look at what the hyperscalers are spending, you have now $400 billion of CapEx, AI CapEx, just in your sites. Then you think about sovereigns, you look at private, look at everything else. It just shows we are in an unparalleled, once in a 40-year tech trend, and that's why that Mount Rushmore is Jensen along with Nadella, Karp, and others.
You talked earlier about how there's a velvet rope and a lot of people waiting to buy these chips. The hyperscalers are at the front of the line, but if you bring in sovereign buyers into the mix, where do they stand? Do they get to jump the line?
Sovereign's in the middle of the line. They're saying, oh, my name's in the list. They're like, look, you can't get in front of these people in the front, and that's big tech. Sovereign's still in the middle of the line. They will get in, and then behind them, it's the rest of the Fortune 2000. That's why we're going to be talking about next year or two, $4 trillion, $5 trillion. This tech bull market, still in the early days.
At Thursday's market opening, Nvidia's stock saw a minor rebound before reversing course and continuing to decline during pre-market and after-hours trading. The chipmaker's stock had risen more than 4% at the opening, but it was down about 1.2% on Thursday morning. On Thursday, Nvidia's stock fell by 1% in pre-market trade. The chipmaker's stock was down 0.75% after the close of business on Wednesday, ahead of its earnings report. After announcing its fiscal third quarter data, its stock fell 3.47%, and later in the evening, it fell 1.2%. The price continued to decline during after-hours trading. According to FactSet projections, the business was expected to set guidance of $37.09 billion, but instead set it at $37.5 billion, plus or minus 2% for its fiscal fourth quarter revenue. John Belton, portfolio manager at Gabelli Funds, told Quartz ahead of earnings that Nvidia would require fiscal fourth quarter projection of at least $38 billion to sustain stock performance on earnings day. Nvidia's shares dropped 6.9% in after-hours trade following the company's fiscal second quarter earnings announcement in August because of lower-than-expected expectations for the fiscal third quarter. Revenue guidance for the fiscal fourth quarter was set at $32.5 billion, plus or minus 2%, which was marginally higher than average analyst expectations but lower than top-end projections. At a record $35.1 billion, Nvidia's fiscal third quarter revenues nearly doubled its revenue from the same period last year, beating Wall Street's forecasts for a second consecutive quarter. The chipmaker's October quarter revenues were 17% higher than the $30 billion it made the previous quarter. The business declared $19.3 billion in net profits and $0.78 in earnings per share, or EPS. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
It's great to see you.
Nicole, thank you for having me.
Welcome. $800 by 2030. So you say it so I can hear it. Go
yes,
ahead.
I believe Nvidia will hit 800 by 2030. I look at things from a long-term perspective and from a technology perspective. But just based on the numbers that were released today, solidify that view. And I'll give you an example, and I think it's important to I'll talk about the numbers once, and then we'll move on to how the technology drives the numbers. So today, they've reported $35 billion in one quarter, which is 3 months. They had a total of $27 billion over 12 months last year.
Right.
So that means in 3 months, they exceeded their entire 2023 earnings by $8 billion. I'm not sure there's a stock in the history of the exchange that has driven that much in billions in revenue, while also achieving 50% margins. So if you do the math on that, 35 a quarter, they're already at a 140 clip in terms of revenue. And in order to achieve the prediction of 800 by 2030, they need to be at 600 billion in revenue. So we're right on target.
And look, I mean, you had Jensen Huang talking about the demand being incredible, more and more demand for the Blackwell chips, and those are already out in the hands of some of the companies and being integrated and everything. The big picture here seems pretty strong overall. You talk about the technology of it, and you're spinning it even into the government.
Yes.
A way that maybe we didn't talk about this.
Yes. So let's talk about the 3 drivers for NVIDIA and why I'm so bullish on it. The first driver is the AI revolution, which everybody talks about. And the penetration right now on AI is literally less than 1%. So that's important to take into consideration based on the performance they've already achieved. The second, which nobody talks about, is the transition from Web 2 to Web 3. Morgan Stanley, Goldman, and Citibank have all given estimates of that from $8 to $12 trillion by 2030. 8 to 12. So we'll use the midpoint, which is 10 trillion. Right now, there's less than 1 trillion spent on Web 3.0, which means it has an opportunity to grow 10 times more. So that's why where the stock is now, which is around 140, going to 600, is actually a very conservative prediction. But there's a new thing that came up based on your question, which was the government. They just started, Musk and Vivek started the Department of Government Efficiency, which is looking at how you cut waste from the government. Now, they call this the second Manhattan Project, and nobody's spoken about this. The first Manhattan Project is when they created the atomic bomb, which has changed the way wars are fought, and it was a game changer. They call this the second Manhattan Project. And the reason why, if they do it right, is they're going to reinvent how government is managed and delivered. And I want to
Even though Nvidia posted a net income of over $19 billion for the most recent quarter on Wednesday, investors were not particularly reassured that the company's rapid growth would continue. Analysts questioned CEO Jensen Huang on the company's earnings call about how Nvidia would perform if tech firms began utilizing novel techniques to enhance their AI models. Test time scaling, the technique that forms the basis of OpenAI's O1 model, was brought up frequently. It's the notion that giving AI models greater time and processing power to think about queries will result in better responses. In particular, it increases the amount of computation involved in the AI inference phase, that is, everything that takes place after a user presses enter on their prompt. The CEO of Nvidia was questioned about how Nvidia's older chips will function for AI inference and whether he was seeing a movement in AI model developers toward these new techniques. Huang described O1 as one of the most exciting developments and a new scaling law, suggesting that it and test time scaling in general may become more significant in Nvidia's business going forward. Huang made every effort to reassure investors about Nvidia's readiness for the shift. On stage at a Microsoft event on Tuesday, Microsoft CEO Satya Nadella stated that O1 is a new way for the AI sector to enhance its models, which was in line with the Nvidia CEO's comments. Because it emphasizes AI inference more, this is significant for the chip sector. Although Nvidia's chips are the industry standard for training AI models, a number of well-funded startups, including Grok and Cerebras, are developing blazingly fast AI inference chips. For Nvidia, it might be a more competitive market. Huang informed analysts that AI model developers are continuing to improve their models by adding additional computing and data during the pre-training phase, despite recent concerns that advancements in generative models are slowing down. In an onstage interview at the Cerebral Valley Summit in San Francisco on Wednesday, Anthropic CEO Dario Amodei added that he does not believe that model development is slowing down. Huang stated on Wednesday that the pre-training scaling of the foundation model is still in place. The fact that it keeps scaling is evidence that this is an empirical law rather than a basic physical law, as you are aware. But we're discovering that it's insufficient, given that the chipmaker's stock has increased by more than 180% in 2024 due to the sale of the AI chips that OpenAI, Google, and Meta used to train their models. That is undoubtedly what investors expected to hear. However, a number of prominent AI executives and partners at Andreessen Horowitz have already stated that similar approaches are already beginning to demonstrate diminishing returns. Huang pointed out that pre-training AI models, not inference, accounts for the majority of Nvidia's computational workloads nowadays. However, he ascribed that more to the current state of the AI industry. According to him, more AI inference will occur eventually since there will be more people using AI models. According to Huang, Nvidia is currently the biggest inference platform in the world, and its size and dependability give it a significant edge over startups. According to Huang, we hope and dream that when the world does a lot of inference, that's when AI has really succeeded. Everyone is aware that they can develop faster and that everything should function if they build on top of QDA and Nvidia's architecture. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community.